We're now getting reports that Donald Trump late yesterday asked Congress if he should fire Jerome Powell. These reports now echo what we saw late yesterday with these comments here, that Congresswoman Anna Paulina says that Fed Chair Jerome Powell's firing is imminent, who then, quote tweets this news on herself and says, confirmed. So Anna Paulina is posting that Donald Trump is going to fire Powell by Friday. This is coming at the same time as we're now getting reported that Donald Trump indicated he'll fire Powell. He asked the GOP members on Tuesday about firing Powell. Also apparently asked if he should fire Powell, and that if he would do so by Friday. Now this is really interesting because it comes at a time where both the PPI numbers and CPI numbers came in soft. We'll talk about those in just a moment. But understand, Donald Trump has told us, I'm not going to fire Powell. We're going to let him serve out his term. We'll pick somebody else. We don't know if it'll be Kevin. We don't know if it'll be Kevin Hassett. We don't know if it'll be, Besson. Donald Trump says he likes the job that Besson is doing. And what we're finding is markets over this last week and a half are starting to not believe Donald Trump that he's saying, oh, we're not going to fire Powell. And I think that's why anytime this news drops, you get the algos that immediately pump gold up. Because one of the things that's likely to happen is if Donald Trump does fire Powell, it's possible you're going to get a really big surge in gold. You'll get a drop in the dollar. Just on some of these comments just minutes ago, we saw UP, which is the bullish dollar ETF, drop right away on these comments. And you could potentially see some nervousness in stocks as that Federal Reserve independence is removed. Now, some of the reason you might get some nervousness with the Federal Reserve is because there's also talk that maybe one of the people that would be picked as the Fed replacement would not actually be as keen on printing in the event that we went into a recession. So this is why some people say, Powell, we kind of know the playbook. If the economy goes into recession or nears recession, you cut rates going into it, and then you turn the money printer on. It's pretty dang predictable. The problem is, if you get someone new who maybe doesn't have that kind of a history or willingness to cut, you don't really know what you're going to get. And some people say that uncertainty is why maybe gold up and stocks down. Now, we got to talk about CPI and PPI because this week could potentially align with the perfect time to basically fire Powell because of the CPI and PPI reports, but they would be a mistake. Now, before we talk about those CPI, PPI reports, though, I want you to understand the Fed chair contender piece that Bloomberg came out with has to do with Kevin Warsh, and he's the guy that a lot of people think is not a good money printer character. So this is Kevin Warsh. We briefly touched on him yesterday, but Bloomberg reported that back when he worked as a governor at the Fed between the Great Recession, he was too worried about inflation happening to encourage money printing. And so he is seen as a candidate that could be a wild card for the Federal Reserve, which is also why people think Kevin Hassett would be a better candidate, because Kevin Hassett will cut rates and run the money printer, both of which is probably, not only what the economy ultimately wants, because people want the helicopter money, but just debases the dollar even more, which again is why people say the dollar or gold is potentially doing so well. Now keep this in mind. In the past, Warsh has had this reputation for being anti-money printing, but lately he's been flip-flopping and adopting a more dovish tone of, we'll do whatever Trump wants, cut rates, let's go cut rates faster, because he wants the job. People see Warsh as coming out and trying to apply for the job. Now, if you look at Polymarket and you see, who might be the Federal Reserve chairperson, historically we've seen Hassett in the lead. But Warsh, who's been that hawk in the past, has been a close second. So Hassett in the lead at 24%, Warsh at 20%, Besson at 17%. One of the reasons he's at 17% is because he's seen as a good Treasury Secretary. So why get rid of him? Keep your good Treasury Secretary. He is liked by markets, unlike Navarro and Lutnick, whatever you want to call them. And the reason people say that now might be the week that Donald Trump ends up choosing a replacement Fed chair is because you had data that on the headline reiterates Donald Trump's point of view that his tariffs are not causing inflation. Consider the following. Core CPI inflation came in lower than expected at 0.2. The expectation was 0.3. PPI, we were expecting 0.2, 0.2, 0.2. We got 0, 0, 0. Now, why is that misleading? We're going to talk about that. Did you know that central banks are loading up on gold, including the Chinese central bank? They're dumping dollars and bonds, and they're buying gold, hand over fist. And this is why I want to introduce to you Lear Capital. They're a trusted partner for when it comes to buying gold or silver. The reason a lot of central banks are diversifying to real money is because they don't have to worry about currency risk. They don't have to worry about the debasing of a currency. Instead, they can invest their capital into something that they expect will be protected from other central banks around the world printing money or crazy fiscal policies by Congresses and legislatures and parliaments all across the world. So this is, I think, why central banks are making a smart move and they're buying gold or even silver instead of just relying on currency-based investments. It's too risky. What do you trust more, gold or a politician? And that's why, much like how I like investing in real estate, precious metals are a hard asset. I know they're going to be there for me, and if you want to get access to some hard assets that at least Goldman Sachs says could reach $4,500 or more within the next year, heck, now all of a sudden you've even got institutions across the board saying, well, maybe it is time to pick up some more gold, you might consider Lear Capital. They're an education-first company, no pressure to buy. A company with a 24-hour risk-free purchase guarantee, over 27 years in the business, almost 30 now. Over $3 billion in trusted transactions, thousands of 5-star reviews, lots of gold companies to choose from, but Lear Capital is one that I trust, and I highly encourage at least give them a call. 1-800-707-4575, or go to learkevin.com for your free gold and silver reports. And remember, special offer to first-time buyers who mention that you heard about Lear Capital from me. You can get up to $15,000 in bonus gold or silver with a qualifying purchase. So take a peek at Lear Capital. Go to learkevin.com. Use my sponsored link in the description down below. All of this is misleading because the CPI numbers that we got yesterday indicated outside of autos, which were a huge negative drag to consumer spending, we had 6.6% annualized inflation on core consumer goods. This is a really big problem. It suggests that inflation is actually skyrocketing inside of consumer goods. 6.6% annualized inflation is some of the highest inflation that we've seen since 2021 and 2022, when we had 9% inflation year over year in that June month. I remember being on a beach in Germany talking about it and announcing it. Leave me a comment if you remember that. I was in Dusseldorf. Who knew they had beaches in Dusseldorf? They have lakes. Spoiler. But anyway, the headline numbers look great for Trump, which is maybe a way Trump can defend. See, no inflation. But then you get actually into the core, and it's like, oh, crap, these are poopy numbers underneath the hood. The CPI report was not good. We started to see the impact of tariffs on consumer prices. What about PPI this morning? Well, PPI this morning was just as bad. The headline numbers are, PPI is doing great. Look at the headline numbers. They're all 0 as opposed to the 0.2 we expected. This is fantastic news. Then you open up the hood, and what do you end up seeing beneath the hood? Well, first of all, we revised our prior PPI numbers way up from 0.1 to 0.3 and 0.1 to 0.4. So a big revision up last month in inflation for producer prices. And then when we separate out the producer price categories and we actually look at nuance, which is something very important that we do on the channel here, what we find is that demand goods are up 0.3%. So in other words, goods inflation up, but services demand down, which suggests that prices for goods are going up, the same thing we saw in CPI, but there's less trade possible because prices for everything are higher, so you're getting less trade services, which would be like shipping, warehousing, brokering, whatever. That's down 0.1. In other words, inflation is showing up and doing exactly what you expect taxes to do. And this is why, in the Alpha report this morning, which, by the way, the Alpha report this morning absolutely killed it because we were talking about Open Door and how much momentum there is in Open Door, and it's up 23% on the day right now. Big move from when we were talking about it this morning, which is fantastic. So once again, Open Door kills it. And of course, Tesla, not surprisingly, riding our 318 line almost perfectly, getting magneted down to it, rejecting it. You gotta trust the lines. Anyway, if you want more of these lines, always remember you could go to meetkevin.com and get your Alpha report. Use coupon code Mr. which is really applicable given all this talk about JPOW. And you could join the thousands of course members that we have in the community taking advantage of the Alpha report every single day. So make sure you get that. But something we talked about in the courses this morning was that remember what taxes do economically. Taxes reduce both sides of the supply and demand equation. Taxes reduce demand, but they also reduce supply because the prices for goods and services go up, which reduces demand for both of those, but also reduces the willingness to supply because your margins go down. The difference goes to revenue for the government, but there's also a deadweight loss, which is a negative economic impact. Unfortunately, when you put all of this together, you could end up with a really nasty situation. And I want you to think about this. The nasty situation looks like this. Donald Trump is now talking about firing Powell again. Even though publicly he's saying he's not going to fire Powell, he's now talking about firing Powell to congressmen and women. This is problematic because it's kind of like the Epstein files. He publicly tells us one thing and then the action is a totally different thing. So that is a risk. Now, what is the risk of firing Powell? Whether he legally can or can't, we find that Trump tends to do what he wants, right? If you fire Powell, what you probably end up with is dollar down, gold up, in my opinion. These are possible outcomes. Probably bond uncertainty in the near term. You wonder, the replacement will dictate, some of the impact. Replacement uncertainty, right? So look at like Hassett, think printer, and Warsh, think, Hawk, which is less desirable. I think Hassett is probably better for risk assets, but also undermines, the independence of the Fed, obviously, right? This case about firing Powell has been building with the mismanagement of the renovation, the allegations by Trump against Powell. But understand, from an inflation point of view, we are already seeing goods inflation, already seeing services demand drop. Both of these are like a stagnation. Both are evidence of stagflation, really, right? Stagnation in, services and inflation in goods. Bad for stocks and earnings. Potentially good for gold. And you're seeing this in the evidence, like actual evidence is showing this now, and it's still early in the tariff drama. Yet, Trump may use misleading headline numbers to justify his actions. So you could see this like perfect storm where like Trump isn't looking at the details and he's going to make a mistake by doing this because his tariffs are causing problems. And now these reports about firing Powell are getting more and more attention because not only are we getting congressmen and women talking about this, but we're also getting this talk about a firing potentially happening this week. Now, I don't know if it will. You know, maybe somebody will talk some sense into Donald Trump. We've seen him U-turn plenty of times before. But it's definitely something to consider. Now, don't get me wrong. Like, yeah, maybe, like, where's my bias in this? Well, my bias, if there's bias, you know, I try to be very neutral in all my videos, is that I actually think, you know, lower rates and money printing is fantastic for real estate. You know, I'll give you a quick example. You know, and you could do this with any numbers, but think house hack, okay? This is why I love house hack so much, okay? We built over $75 million of, you know, post-bond conversion, zero bank debt and no debt at all, you know, $75 million portfolio. Okay, so if we could take that 75 mil and rates plummet, you know, let's say it grows to 100 mil equity by 2027, right? And then rates plummet. Just think about that for a moment. Because, mind you, you can invest in this. You can invest in this at househack.com. Obviously, read the prospectus. You could be a non-accredited investor. We are going to talk about closing this fundraise soon in the next Househack update. So stay tuned for that. But learn more at househack.com. But anyway, rates plummet. Just think about what we can do. We can refi, or well, basically finance the entire portfolio. You could turn $100 million of equity into a quarter, or call it a third of $1 billion portfolio, right? We could go buy, you know, 500 houses basically, wedge deals, which could be $50 million of wedge value at $100,000 a house, right? That's basically, when we go crack the egg of financing, we can, you know, double the equity we have, or at least increase the equity we have now by 50% just by doing these wedge value deals. So, like, in fairness, I love the idea of rates coming down. I don't like the idea of rates coming down, though, and creating inflation. And I don't like the idea of being too late for a recession. So you have this weird duality. But it's worth noting, like, Househack has this really cool positioning where if rates stay high, we don't care because we don't have bank debt. But once rates plummet, whether recession or otherwise, we get to unlock serious wedge value in equity, which is obviously why we're going to close the, you know, our 5% yielding bond round. Because if you invest right now, you get convertibles. They pay you 5% per year. So you get 5% per year cash, and you get all the upside in the stock value. It's basically you know, Ross always calls it a preferred round. Because it's so great. Ross loves it. But anyway, you can learn more about that at househack.com. But it's very interesting because, you know, to me that shows you, you know, my bias. But it also gives you some of the risks of, you know, what Donald Trump is up to here, and how he's kind of misleading the United States on what's actually going on underneath the hood. So we'll see.